Hi. Structuring your business. What are the alternatives? What's going to suit you? It's very important to get it right. And if you can get it right from the beginning, that's important. Even though situations might change down the track. So it's not necessarily something that's going to stay with you forever, but certainly making sure that you're starting off on the right foot is important. So the four main structures are operating as a sole trader, whether it's just you solely, sort of small micro business, in partnership with someone else or others, as a company, or in a trust. So they're the four main types. But what are the things you need to consider? Well, I've sort of broken them up into two components. One is sort of the operational day-to-day issues, and then the tax-related issues. So from an operational day-to-day perspective, familiarity and understanding of the structure and how it will operate for you. Protection against any liabilities, whether they're known or unknown. Control over the assets and income of the business is a consideration. Wealth creation, building your long-term wealth. Accessibility to finance, which is going to be the best when dealing with banks. Disclosure requirements, all the compliance around the various structures. Family considerations in terms of making sure that there's no potential internal conflicts. Employer versus owner considerations and how you're going to treat yourself within that business. Succession planning is obviously another one. And potential future restructuring as their business grows. What does that mean? Do you have flexibility? Then there's the tax-related considerations, which for many are very important, and so they should be. So what are the effective tax rates in the various structures, and what does that mean to you? The tax base and the deductions, how are certain income and expenses going to be accounted for? Access to any tax concessions that you might be able to get is obviously another consideration. The responsibility for the tax liabilities, who do they actually ultimately rest with? Utilising tax losses, should you make any. Financing costs and deductions, how do they work under the various structures? Cash flow implications, access to cash, availability to use cash. Prioritisation of expenditure. Can everything be deducted? What can and what can't in various structures? The impact on social security support and entitlements down the track. Superannuation considerations. So there's some of the things that you need to consider when you're considering your structure. So it's not black and white, yes, I'll just pick this. Because it's not necessarily, the one structure doesn't necessarily suit everybody. There are sort of standards in place, but understanding what's important to you, understanding what business you're running, how you're going to run that business, who's involved in that business, the potential length of that business, the potential scale of that business, all of those things are important. So getting to understand where you are now and what you're planning for the business will help you make the right decision as to what the best structure is for you. Because it can save you thousands in tax, it can obviously protect your assets, it can give you a lot of flexibility if you choose the right one. Hope you found this useful. Thanks for listening. Look forward to speaking with you soon. Bye for now.